Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 27th of July. All right, now as we come into the Asian session, as you can see, finishing last Friday, the US dollar on a clear downward spiral. Now this is pretty good because it sets up a very clear direction across a lot of pairs. Now you can even see on the little box I've got here, you've got the dollar pairs going lower and the other pairs going higher. These are really, confidence building trading conditions as compared to what we've seen in the past. So no longer we're seeing these false breaks, we're seeing the currencies run, and this is pretty evident across the board on all the major currency pairs, right? So now at the end of last week, there's the Aussie, Euro, Kiwi, Sterling were all going higher. If anything, the Aussie started to fatigue a bit, trading sideways as we came close to the end of the week. Euro a little bit, but then we got through Friday, a little bit of profit taking, and now the sort of news is still very cautious. US dollar, right? I'll show you that news in a second. But what we are seeing is now dollar yen heading lower. Now this is part to do with, I think, a bit of an explosion again of coronavirus cases globally. Also the US-Chinese trade issue, which seems to be escalating as well. So the safe havens, the yen and the Swiss are back in play as opposed to the dollar safe haven right now. Dollar CAD, it's having a bit of a battle here, right? So oil's falling a bit, which puts upward pressure on dollar CAD, but the dollar itself is weak and that's dominating still. And I still like to see dollar CAD lower as well with all of these pairs, right? So if I'll just give you a look at that quickly, the news that I'm sort of seeing here. Dollar struggles amid US-China tension. Obviously, they've shut down one of their Chinese consulates. Trump's got, there's more aid going in. This is all geopolitical crap, right? Usually you're seeing, central bank information, analysis of the recent data that came out and all that sort of stuff. We're not seeing that. So it's still very geopolitically driven. But you know what? With that clear dollar direction, we get an extra opportunity, and it's much clearer than usual. So just coming into the daily market insight, right? So if I just scroll down here, now all pairs, right? All pairs are lining up here. So if you're looking to trade with the market, you're going with the direction, right? So dollar yen, dollar CAD, dollar Swiss all heading lower, and the other pairs all going higher, right? And we do have some levels around. But if you ever look very closely at where the current market is, we're starting to see the downside, like the pairs that are going down, they've already broken through close previous support. And now the next levels are miles away. Actually, dollar Swiss is just going through that support level. And on the top side, we're starting to reach for resistance levels, right? So this is where we start to see the currencies move because the resistance isn't close, especially these pairs that are rallying. Okay, so if I just come down, looking at the trading focus, the current active pairs, well, they're all pretty active. Now, I've left dollar yen off this list. It's already gone sort of too far. And we saw this last week where it came into play and then was out of play the next day. So I've just sort of left it off because I'm not as confident with it at this point. The Euro, Aussie, following on from last week, Euro, Aussie and Kiwi, they should continue higher, but we don't have any resistance levels here, right? So what we're looking for is we need these pairs to drift a little bit lower. You usually get that little move up on Monday, like they roll back towards support. You get long there, and then you look for your targets after that. You got to be patient to wait for this. If you're already long from last week, well, get back into the trade and where you closed out Friday. That's the smart thing to do. But Sterling also joining this one, looking for a pullback. And on the other pairs, I'm looking for rallies back towards resistance, right? So this is where you got to play it smart. Don't just jump in where these currencies have moved. You got to wait for the currencies to come back to the levels where you're confident where support or resistance is. And that they are your entry levels. You got last week's pairs, not a bad result with the active pairs last week. Don't forget, this is the market directing us what to do. Okay, Euro, Aussie and Kiwi had very clear technical upward bias. The Euro was the best performer, overshooting the actual target by 20 ticks, and the others just falling a little bit short. But coming into the data right now, just keep an eye on this as we go through things. There's a couple of things coming out. German IFO business climate. Now, why I'm sort of saying just keep an eye on this, if we start to see a bit of a positive outcome here for the German IFO business climate numbers, which are coming out today, Euro's already going up. This will add extra impetus to that upward move. And same for the dollar. The dollar's going lower, so weaker data really fits in nicely. So what you'll find is traders will be more confident to go into a pair that has direction if the data joins up. Now, if this was normal market conditions and we did see strong German IFO numbers, you'd see Euro really shoot to the top side because there is no resistance. At this point, will it shoot up? I don't think it'll shoot up, but I think traders will be happy to get involved if we do see the data rolling that way. All right, so just have a look through your, whether you're using this calendar or another one, there's a bunch of data. We've got some CPI numbers. Obviously, the Fed, the FOMC meeting in the US. I don't know if they can come out with any other genius bits and pieces. Unemployment out of Europe, that'll be a key number to look for this week. And maybe Eurozone CPI, maybe not. But we've got some numbers to sort of have a look at and see if they come into play. Now that the currencies do have clear direction, right, as I said, this is where, funnily enough, the data can really be used to sort of add value to the story, right? If the dollar's going down, you can be sure the news-wise will be all over weak US numbers, dollar weakness, bad data, et cetera, et cetera. It fits the bill, right? And that's why these things may run if we do see that. All right, now these are all geopolitically obviously driven, so just be aware, you've got to factor in some random Trumpism, right? He has the ability to flip things around, but at this point in time, all those pairs are breaking up or down through short-term and long-term charts, and these are good, clear directional opportunities. All right, guys, have a good trade week. Cheerio.